After a week of financial turmoil, the British government has backtracked on the most controversial measure of its so-called growth plan, cutting taxes for the rich.
We just talk to people, we listen to people, I get it.
The pound is up on the news after sinking last week, and yields on 10-year bonds have declined somewhat. The optimistic view is that the government is coming to its senses after a massive stimulus plan spooked markets last week. The pessimistic and maybe realistic view is that this won't be enough. Tax cuts remain at the core of the government's plan to the tune of £40 billion. So investors will have reasons to worry because so far the government hasn't said how it will finance those measures. Promises of future spending cuts are not credible, and if they were, they would hurt growth because the risk is that public investment would be cut just as the government needs to pay for the green transition, improve the country's healthcare system, and of course increase defense spending. More fundamentally, the government has to realize that it was a terrible idea to announce a fiscal stimulus plan when the country is at full employment, inflation is raging at 11% a year, and with a big current account deficit. So for Liz Truss, the Prime Minister, the road to economic credibility will be long and arduous.